reflection on the oil markets open in Asia this morning, which is, one would have to say, a significant move to the downside. With expiration of the current contract on June 30th, we saw Brent drop 4% this morning, over $4 on the move, which is a little bit reflective of the big move we had last Friday, which similarly seemed to be taken down by the overwhelming negative sentiment on the markets, on the equity markets and all financial assets after the sort of bazooka increase in rates by the Fed last week. Is this part of that same momentum? Let's go to Richard DeGoglia, CEO of Matrix Global Holdings in California. Richard, good evening, good night, as it is to you still in California. What are your thoughts on this market at the moment? The downward draft does feel like it's got some weight.
Yeah, hello everybody. I think it does, Sean. I went back and looked at some data and looked at really equity markets and the relationship to energy markets. And this market has remarkably stood out from our past downdrafts in markets. And I have some data. I'll look to my side here and look at the data. But if we look back at equity markets over the past 20 years, and we look at the 2000 period, the 2008 period, a brief period, 8-9 period, and a brief period around 2020, we saw whenever equity markets fell, the oil market fell with it. And the data shows that equity markets fall 40 or 50%. The energy markets fall at least that amount, if not more. What's remarkable about this market is, if we assume that the equities really started to fall a while ago, probably 4 months ago or 5 months ago, they're down 22%, so effectively a bear market. Oil prices have gone up 60% during that period of time. Now, of course, we have a war in the middle there, but in reality, what we also have is the energy transition. And I think that what we've experienced here is weakness in energy markets as a function of, historically, as a function of demand, of the market, of equities turning down, of the economy slowing down. This market has been decidedly different, and I go back, and we've talked about this many times on this program. This market is different because the normal responses have been different. We are not seeing we're seeing a situation where OPEC Plus has been in control, where the supply has been somewhat curtailed, and we're coming out of COVID, a COVID world where demand is really on the uptick. It's kind of been on the uptick since late 2020, and so I think I think you put it perfectly. There's some weight on this market now. I think we're starting to get the effect of what slowdowns and economic activity can do to the energy market. The question is, how great will the correction be? We're up 60. As I look at the numbers, we're up 60% from the from $70 to $120. So we have some room to run on the downside. I think the real question is going to be, though, is the supply response? Is the supply going to overtake what could be considered a decrease in demand? And we don't have the answer to that just yet.
Well, let's go to Pakistan. Osama Rizvi, energy and economic analyst at Primary Vision Network. Of course, these declining prices are really somewhat insignificant for countries like Pakistan, which are already under significant economic duress. We saw this week, Osama, in Pakistan, the Karachi government instructing all markets to shut, shopping malls to shut early, wedding halls, restaurants to close by 9 p.m. We're hearing similar language, which also in Germany. The scale of this sort of inflated energy burden is really putting both developed and developing economies under great stress. How do you see the outlook for your country and others like it in Asia? Osama, sorry.
Yep. Sorry, yeah, there was some internet issue.
Okay.
Was there a question?
It's not 9 p.m. yet, so
yeah.
Now, I was just asking your thoughts on this. Obviously, we're talking about a declining market today, another big move from last Friday, but nonetheless, these are still big energy costs, and with inflation being where it is, countries like Pakistan remain under great duress. Your outlook on that?
Uh, Essentially, what is happening these days, from the past 3 or 4 weeks, traders and markets are trying to get the hold of whether to side towards the recessionary fears or towards resurging demand. So I think what's driving the markets lately is not as much as fundamentals, but sentiments. And this, of course, as always is the case, is hurting the developing countries in all forms. For Pakistan, things remain quite difficult, both in financial and social terms. We have seen a petrol price hike of 45% in less than 5 weeks. We have seen gas prices, electricity prices rising more than 60%. So for a common man, things are getting really, really strange. There are different figures regarding inflation in Pakistan. So Steve Hanke from Johns Hopkins University said something really interesting recently, that the government figures, which says that the inflation is 13.8%, is not true, but the real figures are somewhere around 14%, the effective inflation rate. So just to give you an idea of how bad things are here in this part of the world.
The next door neighbors clearly feeling it as well. We've got in Iran this morning Daniel Rahmat, senior energy security consultant, joining us. Daniel, let's just start off with the growing noise that the Iran nuclear talks are now they're essentially dead, according to most noise coming out of Washington. Your thoughts on that prognosis and the outlook for it?
Hello, everybody. Very glad to be here again. Regarding the nuclear talks, the talks were suspended for a long time in Vienna, and as everybody knows, the deal was already made and was about to be signed by sides, but immediately everything changed as a result of the Ukraine war. And first Russians made some problems, and later Iran started to ask for more demands, comparing with the JCPOA deal which was made before. So I think that the whole problem with JCPOA at the moment is absolutely political, and somehow it's tied with the interests of Russians in Ukraine. So I believe that as long as that bigger crisis, which is a war which has shaken the world, is still in place, there would be less chance for JCPOA to be revived. But we hear some news from domestic officials that they have proposed some new resolutions for reaching a deal with the U.S. regarding the problem that we already talked about before, regarding the IRGC's problem in the
and that seems to be in essence the deal breaker. And now we're in a situation. We had the Wall Street Journal reporting earlier this week that given the sort of end of the nuclear talks, or at least their suspension or their collapse, however way you want to frame it, they're not happening. And there's reports in the Wall Street Journal of Israel looking to expand its sort of covert operations to contain the Iranian nuclear program in the absence of a nuclear agreement. The impact that could have in escalating this standoff. Your thoughts on that?
Recently, Israel and GCC have increased the level of their cooperations, and that is absolutely. I don't have any special intelligence, but absolutely, it should be in the security issues too. But when it comes to the nuclear program of Iran, if Israelis or any other country wants to remove that program in an undemocratic and undiplomatic way, they should go to start a fight. And I have serious doubt whether GCC is open for accepting the cost of such fight, because they're just neighbors to Iran, and Israel is somehow distant from this country. So I'm not sure whether the GCC is going to join any attempt for attacking Iran. This is my idea.
Richard, one of the pillars obviously of this oil market is, of course, the U.S. economy, the world's biggest, the biggest oil market in the world. The outlook growing. We had Elon Musk joining the chorus of voices yesterday predicting a U.S. recession in the coming quarters. Your thoughts on the outlook for that? The U.S. economy does seem to be in a bit of a contradiction. It's got, record employment, and yet these very dark clouds of economic duress ahead.
It does, and it's a very peculiar situation we are in. We do have record unemployment.
Record employment.
Record unemployment, or record employment.
Yes.
Thank you. But
which may become unemployment soon, but nonetheless, for now, it's still employment.
But at the same time, we've got this kind of quasi work world now, where people are working remotely. I think I've said before, the energy GDP ratio of the United States is very, very low. So I'd ask the question: if you have less economic activity and you go into a recession in the U.S., what is the actual demand function? I don't know the answer to that. I think our demand is going to stay relatively consistent. So I'm not sure, except a recession would cause greater problems in the rest of the world as far as its economic activity in China and other places. So we'd have to kind of turn to them and say, what is Pakistan going to do? What is India going to do? Where's their demand going to go? I tend to think we need to look to the rest of the world as it relates to total demand. In the U.S. right now, what we do have is a real battle between the administration, the government, and our energy companies. There's letters going back and forth every day, arguing about, I tend to think, just relatively, it's illogical. We have not built a refinery in the United States since 1977. I think Chevron wrote a letter today saying we've increased our oil production in the Permian, we've increased our yields at our refineries, but yet you have the President of the United States saying, literally about the CEO of Chevron saying, gee, I guess they're pretty testy right now. So it's a real disconnect. I think our economic activity is going to go along as it goes along. I think we've never been in a situation where prices have reached $120 and we didn't go into a recession. And so you raise interest rates. I think it's time a recession can come. The effect on demand, though, I think is a bigger question as it relates to the United States.
Osama, given that situation, we hear quite often at the moment about your neighbors in India benefiting and taking the opportunity to buy a lot of cheap, discounted Russian oil. We don't hear so much about Pakistan availing of that opportunity. What's the position currently vis-a-vis Pakistan and the conflict in Europe and this idea of availing of Russian discounted energy?
So I've said this before on your show as well. I am a strong proponent of Pakistan buying Russian crude, as India is, because we, like India, import a major portion of our energy from other countries. And I've done some research, and even our refineries are quite compatible with the Russian crude grade as well. So it turns out that there aren't any technical factors hindering such an undertaking. However, there are quite a bit of diplomatic caveats. We all know the recent ouster of ex-Prime Minister Imran Khan, right? And a big part of that was his visit to Russia during the invasion. And what followed was that he was taken out by a vote of no confidence. And there was a conspiracy that it originated by a letter from the U.S. Ambassador, and something like that. That being said, Pakistan has officially condemned what is going on in Russia on humanitarian grounds. Our army chief has said that as well. But our cooperation, I continue to bring this point, highlight this point. Our cooperation with Russia is important because of our energy security. We are dependent, our domestic gas production has fallen and is expected to fall for the next 5 years. Our oil production has fallen due to the lack of technical know-how and import caveats and other stuff. So we remain dependent on Russia, but due to diplomatic caveats, due to our rather recently unhappy relation with the United States, due to some conspiracy theories popping up, we have not been able to take advantage of a $35 discount on Russian crude oil, which we should have. I think that is the need of the hour. I've been writing about it as well, Sean. Pakistanis have seen an incredible amount of increase in petrol prices in just 3 weeks. It is unimaginable. If you take 100 Pakistani rupee, 40%, 40 rupees directly goes in it for the basic food items. From the 60 that is left, you have to pay the energy prices, which are 50 to 80% higher than recent month. And there you have it. You instantly go into a deficit. Even the individual goes into a deficit. So that's the situation right now. And hence, I urge, I've written about it, that we as the Pakistani government should avail this discount. India is part of the Quad agreement as well. India is a strategic ally of US. India is, but at the same time, they are prioritizing their energy security. So why shouldn't we do that as well?
Daniel, also coming a big story into the region. I'm wondering from your perspective on the region, the US President Biden is due in the coming weeks to meet with the Gulf states and all of its leaders, including the leaders of Saudi Arabia and Israel. And now Israel is going into yet another election. What is that Biden engagement with MBS in particular, but also with the Gulf states, what does it tell you at this time, given the wider regional dynamics, the Iran nuclear talks, and so forth?
There are a lot of trips from political officials coming to Tehran. President of Kazakhstan recently visited Tehran and signed some agreements with Mr. Raisi. Tomorrow, Mr. Lavrov is going to visit Tehran to discuss JCPOA, and Iran recently reached a sort of conclusion with part of its frozen assets in Iraq. Iraq delivered $1.6 billion to Iran. I think at the same time, Iran is expanding its relations with many republics within the Russian Federation. Many delegations come to Tehran for business deals. And recently, Iran sent one cargo directly from Russia to India as a sort of north-south corridor. This all, in addition to President Biden's visit to GCC and Israel, shows that both sides are on the brink of making a final decision. They will either revive the JCPOA, which is almost, let's say it's almost a dead deal, or will start a new formation or new somehow countering each other in the region. But I think Iranian officials at the moment are thinking of a new world order, which is going to be replaced by the previous one because they think that the Ukraine war is going to reshape the world political and security order. So I think President Biden is going to negotiate with Saudi to somehow increase the production. And at the same time, Saudi is going to ask for some in return. So the question is what Saudi and Israel are going to ask in return, or whether what they are going to ask is the same thing. If they both are pursuing the same target, which is going to be kicking Iran out of the table for a long time or countering Iran, in terms of its nuclear program, or most importantly, I think Iran's activities in the region. The question is,
do you think that position is anchoring into the thinking in Tehran that this moment, Russia's Ukraine war, is a seminal structural shift in the global security architecture? Is that concept sinking into the Tehran view of the world?
Of course, I think so. And Iran is going to try to use this momentum as a sort of increasing its level of strategic partnership with Russians. You know, if Iran is considering that Russia is in serious need for a regional partner, or let's say a regional ally, Iran is not going to make a deal with the U.S. easily, and at the same time, U.S. is not going to be naive in this regards, because they're not going to make a deal with Iran without reducing Iran's activities in the region. So I think the chance for an agreement is lower than before, but the whole issue depends on what Saudi and Israel are going to ask for in return.
Yeah, well, let's go to the survey question and get the view, because it doesn't seem like there's much changing in the context of Russian oil exports, even though the IEA are still holding on to their view that Russian oil output will fall quite significantly this year under sanctions by the end of the year. They are sticking to their view of a decline of some 2 million barrels a day. I'm asking you this morning, do you agree with this IEA forecast? Yes or no? It doesn't seem to be coming to light yet. If anything, the most significant sort of outcome of Q2 has been the fact that Russian oil exports haven't been that disrupted much. Will that finally come to fruition in the second half of the year? Do you agree with the IEA, yes or no? Richard, the challenges facing Europe now are quite significant. Last week, of course, is the sort of next level of gas disruption coming out of Russia into Europe. We have sort of stark warnings now of, as I said at the opening comment, from Germany saying that they calling on all citizens and businesses to conserve energy and so forth. There's a lot of dependency increasing on the U.S. U.S. energy moving across the Atlantic. Should the Europeans be looking elsewhere, or can the Americans fill some or a significant piece of this gap over the next 12, 24 months? Your thoughts?
You know, if we had, I don't know the answer to that. I would say when you listen to John Kerry speak, and he speaks in this kind of this tone of all knowing about how we need to transition away from hydrocarbons, and this is not the time to be thinking about this. And then you listen to Secretary Granholm talk about we need to increase refined capacity, but we're still transitioning to oil in 5 years, and oil companies should become patriotic. The statements are so illogical to me that I don't see how the U.S. Is going to be able to be anything but what it already is, supplier of as much as it can, as quickly as it can. We had a fire at the Freeport LNG plant. We saw natural gas in Europe skyrocket and natural gas in the United States plummet. So the market is in balance. BTUs need to leave the United States and go to Europe. I think Daniel made a very good point about this new world order. I did not believe that Russia was going to invade Ukraine, but now that they have, and now that they're being persistent and they're controlling the Donbass, and they control the Black Sea, and they control an area of movement, they might know exactly what they're doing. This could be a commodity-led world. The currencies, the printing of the money, the commodities becoming very valuable. This is other people having control, and Russia is in control right now. There is no way out for Europe. They are building coal plants now, or excuse me, going to fire up coal plants now. They're wrong. They got it wrong, and now they have to live with it. So I don't think we're going to see any new LNG plants coming online. I talked to one of the largest pipeline companies in the United States about a month and a half ago, and who one of their pipelines was canceled. And they said at every desk in every bureaucrat's office, there sits somebody who says no. And so to move any project along a normal timeline is impossible. Everybody has the lawyers, they have the bureaucrats, and they are going to prevent this energy transition. And this goes back to what I said before about equity markets. It's possible for the oil market to move down as equities move down. The bigger question I have is, in the normal of how markets moved prior to this, was when equity markets moved down, well, so did energy, but it was the lower energy prices which last to kind of the rebirth of the equity markets. What happens in a world where energy markets stay elevated even during a period of equity weakness? What happens if natural gas stays at this elevated price? It's going to, right? It's going to. As long as Putin is in power, we're going to be sanctioning Russia. And so I think we're in a very, very difficult situation.
Osama, if you take that point, and it echoes what's on the front page of the Financial Times today, with the IEA chief warning Europe to prepare for a total shutdown of Russian gas exports to Europe. And of course, a total shutdown of gas exports to Europe, which are principally pipeline, is gas that can't go to market anywhere else because there aren't pipelines that can shift it in a way that seaborne oil can go. So Europe is going to be scrambling to find gas wherever it can, which of course is going to compete with Asia and compete with Pakistan and other countries and push that gas price up. What contingencies do you think that Asian developing economies can make in anticipation of this total shutdown of Russian gas to Europe, which essentially takes a huge amount of a resource off the global markets, not just Europe?
It's very interesting. A few weeks ago, I was on a local TV channel, and I give the same remark that unfortunately, what happens next for the remaining year in Pakistan or other developing countries is now intricately and intimately linked with the European politics. So, I mean, right now, the oil Europe has only banned the oil coming from the sea, but gradually it moves towards the pipeline, and similar with the gas. So in terms of, needless to say, it will wreak havoc for countries like us. It already is. But what we can do in the shorter term, unfortunately, I don't know. There is more pain. There will be more pain for the common man. You know, what has happened recently, Sean, is that because of these price hikes and everything,
I think so, Osama, your line has kind of dropped into a difficult space there. So we're going to have to just take that last.
Well, that measures subsidies. Can you hear me now?
You've come back in, yeah. Just by closing comment there, Osama.
So I was just going to say the leaders here need to take unpopular measures to consolidate their fiscal situation first, and then move towards some policies that would provide relief for the people in the medium to longer term, but not in the short. I don't know there is a way to do this in the shorter term. I don't know.
Let's just get the survey result. Give Daniel the last word this morning. Do you agree with the IEA 2-1 here, or 60-40? No, not agree with the IEA forecast that Russia's oil output will decline. Daniel, one thing that sort of has gone off the radar screen in all of this noise regarding the collapse of the Iranian talks and, of course, the Russian oil pouring into Asia is the Iranian oil selling into Asia, the floating storage, the supposedly 100 million barrels of Iranian oil available and maybe come to market. What does that outlook look for you now? Iranian oil exports growing in the aftermath of failed nuclear talks.
As you know, last month Iranian oil production decreased a little bit, and that was a signal that Iran's Ministry of Oil's actually decision to increase steadily the oil production has failed somehow. But I think the 100 million barrels floating and plenty of onshore storage here and in China is a serious headache for the NIOC, because especially the gas condensates is becoming a very serious headache for Iran, because you can stop oil production, but you cannot stop gas production. Iran needs the gas for domestic uses, for generating electricity and for other uses in petrochemical plants and other elsewhere. And I think the gas condensate is becoming a very serious problem for Iran, because there is very limited market for that worldwide, and Venezuela is one of those markets for Iran. And I think if China does not import gas condensates from Iran, and if gas exports to Europe is suspended and they cannot export gas condensates to those countries, and also in the other markets they already have, they're going to float Chinese market with their gas condensates, which is the sole market for Iranian gas condensate. And so, as I told you, Venezuela is one of the options Iran is considering for exporting its gas condensates. And recently, Venezuelans are increasing their production and exports to Europe. So maybe they need Iranian gas condensates for producing more oil, but it's not going to be a final solution for Iran.
Well, we're going to have to leave it there, with Brent crude oil trading just below $110 a barrel. Will we see this momentum to the downside continue, which started a week ago, or not quite a week ago, or will we see what has happened in previous times where there's been that bounce back again to the upside? Let's have to see where that goes through the rest of the trading week. But at the moment, it is downward motion, with all financial markets under the weight ultimately of the talk of recession. All the best. I'd like to thank very much our commentators this morning, Daniel Rahmat in Tehran, Osama Rizvi in Pakistan, and Richard Radogli in California. Really diverse voices, but ultimately really insightful. Thank you. Where will we go next? That will be here every morning, 10:30 UAE time. All the best, and thank you.
Thank you. Thanks, guys.